All right. So I'll go ahead and get started. So investments in a certain time. So, one of the things, obviously, everything that's going on in the news is easy to get distracted and understand and be in a place of fear and concern. So I wanted to do this webinar just for the sake of I've been getting a lot of calls from clients and so forth. So I wanted to make sure that people had at least some understanding and were able to put things into perspective. And so really what I want this talk, this webinar to really bring about is what to make of our current situation, especially when it comes to your investments, when it comes to what you currently have, the opportunities in front of us, and so forth. So obviously, if you guys don't know, Ozzy Alonso, but I'm a licensed financial professional. I've been in the financial space for the last 5+ years. I've been teaching families and people how to invest, how to make money, how to work without financial products. So I help pretty much anything you could think of in a financial field, everything from insurance, investments, and to make sure that you're on track and you're meeting all your goals. I'm able to provide that. So I'm bringing insight of something that I've been covering and understanding for quite some time now, and sitting down with a lot of families and showing them how to go about this. So hello, sorry. So an agenda. I really just want to go over a little bit what I will be covering. One of them is mindset. Kind of thinking about really mindset, 'cause everything starts in the mind. And second of all, let's look at the big picture, like historically speaking. What are we looking at? How does that play into our current situation? And should we overreact, or what's happening? And the third thing is, where's our economy going? And number four, we're going to talk about some strategies to implement, something called dollar cost averaging, which I'll get into the end. And at the end, I'll do a recap and a Q&A for people. So uh, let's talk about, you know, to taking our thoughts captive. One of the things I'm big into and just understanding is like, hey, what is currently in our mindset, right? It's easy to look at the news and see what's happening and overreact, right? So I feel like first we have to ask the question, what do we think of the coronavirus? What is happening here, right? And it's easy to be, where people are on lockdown, everything that's happening across the nation, but ultimately that's out of our control. So what we could only control is how we view the situation, right? And I know it's a little extreme, but it says, is the world going to end? And I think for the most part, most people that understand this, like, hey, the mortality rate's really low. Is it something to be cautious and concerned about? Of course, I'm not saying that, but let's look at the big picture, long term. Is the world going to end? Probably not. So what's the other option, right? Are we going to be able to get through this? And I think all of us understand that we will be able to get through this. For most of us, we're still going to be here 6 months, a year from now. So with that in mind, brings me to my next point. So again, if we come from this perspective, we understand that, hey, let's start making decisions that we are going to get through this. Let's start thinking about that, because if we get concerned, and don't get me wrong, man, I was those people that were watching the news, and it's easy to get distracted and bummed out and just kind of out of your funk. I had to kind of distance myself from all that situation just so I could kind of get a better grasp and take a big picture, look at the big picture. Which brings me into this. Let's keep things into perspective, because ultimately that's what we're here to do. And you have to keep your eye on what is your overall goal. And I think one of the things that we could work on at this time is to be clear and concise with that. I was just looking at some numbers. So if somebody made $75,000 a year, and they wanted to keep that making $75,000 when they retire, that person would have to accumulate about $3 million. So for that person, if they want to keep making $75,000 when they retire, they need to have $3 million saved so they could live off it, so they don't run out of money. So that's clear and concise. So if you don't have anything in place, I would highly recommend having something like that in place, and we provide a free financial needs analysis that can show you where you're at and how to help you get there. But I think it's a great time to understand it, because if I know that my goal is down the line, I'm not too worried about what's happening right now. And when are you going to need this money? That's something else you have to keep in mind. Are you going to need it in 5 years, 10 years, 20 years, 30 years? Because now, if I don't need that money for 20 to 30 years, I'm not overreacting to what's happening right now. With the coronavirus or whatever the case may be, because it probably won't be the last thing that comes. If you need money in 30 years, there's going to be other events that are going to happen, right? There's going to be things that cause the market to be disrupted and so forth. So as long as you keep that perspective, you understand where you need it. Whereas if you're 5 years away, this is a perfect time for you to sit down with somebody and really evaluate your situation. Because if something like this happens in the future, you want to be prepared and you don't want to overreact. And you have to stick to the plan. I mean, ultimately, you got to focus on that destination. And I have the image here, right? Like if you're focused on where you're going, the things around you are really not going to distract you. So it's like if you're going on a road trip from here to California and somehow you get lost, you could either pout and be upset and head back home or stay there, or what's going to happen. You're still going to California. You still have to take that trip. So your destination is really the goal. And and ultimately, don't make decisions with the headlines. I know it's easy to see what's happening in social media, everything that's going on, and this coronavirus is. I think it's, I'm to the point that I just need to like distance myself for all this bit. Understand that, hey, if you focus on what's going wrong all the time, you're rarely going to make decisions. I mean, think about it. Most of us don't make conscious and good decisions when we're upset, when we're fearful, when we're doing things of that nature, because we lose track of everything else. So as long as you keep this in mind, this will help you, because ultimately the point is to help you reach your goal. And there's a parable, and I'm not trying to throw my religious views on anybody, but there's a parable called about building your house on a rock or the sand. And I think it makes perfect sense to what's happening here. And I'm just going to paraphrase it. If you want to look it up, you feel free to do so. But it tells you it's about the story about two people, right? In this case, they're saying, hey, somebody built their house on the rock and somebody built their house on the sand. And when the storm came, the water came rushing down. Which house do you think was not able to keep their foundation and fell apart? Is the person that's built in the sand, the person that really didn't have a clear, concise plan, the person that wasn't for sure determined to reach their destination, whereas the other person was built on a rock. They knew where they stood. Regardless of what was happening around them, they were going to be okay. And obviously, and the Bible is talking about the word of God, but in here we could use the same parable. It applies here, because if you have a plan, you're not worried about the coronavirus or anything else that comes along the way. So let's take a deep breath now, right? Now that we had a chance to look at that, we could take a deep breath and let's look at history, because I think history is going to be our greatest teacher. And if you look on the screen, this has been around since the 1900s. This is Dow Jones. This is top 30 companies. Look at what's happened over time. Has it gone up or down? Over time, it's gone up. Yeah, there's been dips along the way, but guess what? Over time, it's gone up. So even if we look at it from the standpoint in the last 20 years, this is 2000 right here. For the last 20 years, it's gone up. Even everything that's happened, all of that's going on. Yeah, that was the bad 2008, but guess what happened right after that? It went back up. So if we keep that perspective in mind, again, I think we all agree that the world's not going to end. I think we agree that, hey, we're going to get through this. So if we're going to get through this and I don't need this money for the next 10, 20 years, what should I be thinking? I should be thinking that this money is going to continue to go up. And that's what I wanted to kind of make sure we bring it back. And I have here, this is the Standard & Poor 500 index. So this is the top 500 companies in America. This is what makes our economy. So if you believe that everybody's concerned, one of the things I hear a lot is the stock market. What if I lose all my money? Well, by you saying that, you're saying that all the 500 biggest companies in the American economy are going to collapse and go bankrupt. You know that if that happens, we no longer have an American economy. Like your dollars don't even matter. So if that's the case, YOLO, live your life, right? But that's not really the case for most of us. We understand that this is not going to be the end all be all for us right now. So the S&P 500, the government's going to make sure that these companies keep flourishing. And since the S&P 500 index was started since 1975, and look at what it's done. It's continued to go up. In fact, you see the dip right here. So, and I'll talk about this shortly, but if you look at the dip right here, you understand that everything that's come down has what? Gone back up. It's come down, it's gone back up. Come down, it's gone back up. It's gone down, and it's come back up. So again, giving you a perspective of the top 30, top 100 companies, they've always persevered, just like the American economy has always persevered. So I want to show you some past viral outbreaks and how that's affected the market. Because if you understand this, I think it'll give you more ease, it'll give you more of an understanding of what's going on. So the global equity market. So this is what's happened. This is SARS in 2003. This is the avian flu. This is swine flu. You name it. This is all happening, right? And dip up. It dipped and went back up. This one, swine flu, was actually in the midst of the economy going down, but see, it didn't stop. So MERS and went back down, boom. Most of them have caused a dip in the market. The coronavirus, it's something we haven't seen. So yeah, it might dip a little bit more than the rest of them, but guess what? They've all going up. So here, I'll show you one more. I think this one, it does a great job. So this is all the epidemics that we could think of. So you name it. So this is 6 months after they hit at their bottom. They all grew for a minimum of average of 8.5%. Some of them did 39%, some did 13%. So again, look at this chart. All these eventually go up. All these eventually go up. All these eventually go up. So what I'm trying to give you here is that if you look at what's happened historically, you shouldn't really, should you be concerned about the coronavirus? Yes. But the American economy is going to bounce back. It's done it 100% of the time. Will this be the one time that it's not? I wouldn't bet on that. I would not bet my money on that. I would bet my money that it's going to go up. So what does that mean for our economy right now? And you'll hear these words thrown around, and I just kind of want to toss them in here just so you guys could understand and see it from economy standpoint. So there's a thing called a market disruption. So the market cease to function in a regular manner, typically characterized by a rapid and large market decline, which is what happened. If you notice all the events that I showed you, those are events that caused it a dip. 9/11 was one of those ones that caused it a dip. And then what happened through 9/11? The market went up. So market disruptions, it happened all the time. Market disruptions could lead to recessions. And you'll hear this word already thrown out, which is actually very premature. In fact, it's kind of, it's trying to plant the seed. Because a recession, by its definition, is a decline of the economy for 6 months. That means the economy has been going down for 6 months. This thing has only been here for a month, and we're already calling it a recession. I think it's very irresponsible of the media and all these companies. Again, we're not there yet. We're only a month in. And obviously a depression is, you heard about the Great Depression in like 1929. That's an extreme recession that lasts 3 or more years. Has that happened? It's never happened since then. So what do I think this is going to happen? Probably not. If anything, we're in a market disruption or recession, but here's the great thing. There's a lot of opportunity. So what always follows a market decline? Market expansion. And what is market expansion? It's pretty much economic growth. That's growth. So the market is going to grow. And remember, the government involvement is very crucial here. If you guys noticed last week, there was $1 trillion that was pumped into the economy to help it grow. The government has every interest to make sure that the stock market and that we flourish, that we do well. Because if the markets in America go down, we lose our strength as a superpower in the world. That means that we don't have an influence around the globe. People still look at the U.S. as the most powerful nation in the world, which is a good thing. We live here. So the government's going to make sure that the companies are taken care of, because if you start seeing all these companies go bankrupt, nobody's going to have confidence in the American economy, which is going to cause people to not put their money here. So again, we want economic confidence, but check this out. Look at what history has taught us. These are all the recessions we've had since 1974. Look at what they've done 5 years after their return. So that means if you would have put your money in 1974, your money would have grown 118%, 266%. So at the lowest, the thing is, we don't realize when we're at the low at that time. But if we look at history and everything I've shown you, is that we got to take advantage of that opportunity, which is going to bring me to my next point. But look at all this. All these recessions have led to a market expansion growth, which means opportunity. See, most of us are scared because we see all the headlines, but we got to look at it from an opportunity standpoint. So let me give you an example of what it is about dollar cost averaging. I'm kind of mentioned at the beginning. I say COVID-19 story. So let's say you had 600 bucks, right? You had $600 and you wanted to invest it. So you wanted to invest it, $600. Now you come to me, you're like, Ozzy, you know what you're doing. How should I move this money? I was like, look, you could do one of two things. You could either invest it right now, $600, but I'm actually going to tell you to spread it out over 6 months. And you're like, why? Trust me, I have an investment strategy called dollar cost averaging. I'll show you what I mean. So what we'll do is that we'll take that $600, spread it out over 5 months. Let's say we started last month, right? And it's going to go right in line with COVID-19, like the coronavirus, right? February, March, April, May, June, July. All right. So first of all, you put in $100, and I'm telling you that actually, I forgot to mention that we're going to invest in gasoline, petroleum. So let's say the price for a barrel of gasoline, and I'm just using hypotheticals here, is $100. You put in $100, how many barrels can you buy there? Each barrel costs $100. One, right? So now it's March, which we are in now, right? The coronavirus hits, people aren't driving, people are concerned about the economy, gas prices drop, the price of petroleum drops. You're putting in $100, now the price of the barrel costs $50. What's the number of barrels you have? 2. April comes, boom, and guess what? There's been more coronaviruses. And I don't know if this is the case. They're saying that it might go longer, but I'm just using hypotheticals here. I don't know what's going to happen, but here, another $100. Now the economy's even in worse condition. People aren't buying. People have been off jobs for a few more months. So people are definitely not buying gas and traveling. $100. Now gasoline, the barrel of gasoline costs $25. How many do you get? 100 divided by 25 is 4. Next month, we're still in a recession, still bad situation. Boom, boom, boom. $100, 25, same thing, 4. June, we start hearing good news. Hey, man, you know, the coronavirus is being controlled. Let's move forward. You know, people are starting going back to work. They start opening restaurants. What do people do? They want to go out and eat and enjoy life. So the price of gas starts going up slowly. So now it's 100. You put in $100. Now the price of barrel goes up to 100. How many did you buy? 2. And then let's say July, we're back to normal. We're back to our regular lives. The economy bounces back and it goes back to 100. So how much do you get? If we go back to example up here, how many do we get? 100. So now you're looking at us like, man, dude, we didn't make any money. It started at $100 and it went back to $100. We didn't make any money. What happened? Again, because we were investing and kept investing money, what happened? We spent a total of $600, but how many barrels did we get? Did we purchase? 14. If you do the math, 14 barrels times 100, because that's how much each of them are worth. Now we could turn around and sell them for $1,400. We subtract the $600 we invested. We just made an $800 profit in this amount of time. So what is this trying to tell you? Is that look at when I guess this is the question. When did you make your profit? How are you able to make $800? Did you make it when the market was high or when it was low? Low, right? And that's what, see, what we're entering an opportunity right now that most people are seeing as a challenge. And it is a challenge for a lot of people. But you got to understand that you're actually looking at things. See, nobody sees, everybody's concerned and fearful during these times. Then nobody ever sees the opportunity when it hits them in the face. And what I'm telling you, history has taught us. I just showed you a bunch of examples of what history has taught us. we're actually going to go through something like this. So if you know that this is where you make your money, why would you wait till it goes back up to put your money in? Or why would you take it out? Because now you're selling it at a discount. And see, that's what people need to understand, that this is not the time to sell. This is time to buy. See, there's a time to buy and sell. And I hope that makes sense. So just to recap quickly, you got to be in it for the long haul. It's just like this guy right here, right? Stay level-headed. Don't react emotionally to what's happening in the media and what's happening around us. And you got to keep your eyes on the prize. Keep the goal in mind, because that's ultimately where you need to go. There's going to be speed bumps along the way, but you got to understand that, hey, that goal is your goal. So if you're determined to retire at a certain age, you want to have a certain amount of money, you need to focus on that goal. Everything else kind of stays where it needs to stay. And ultimately, keep your perspective. Make sure you're maintaining that perspective of, look, we're not going to die. We got to take a step back. Let's look at what's happened historically. The market's gone up. In fact, if there's a time to put in money, this is the time. See, if you go back to 2009, and I like to compare it a lot to the housing market, you ask most people that buy and sell houses, if they could go back to 2008, 2009 and buy more houses, all of them would say with 100% certainty that they would have bought a bunch of houses. See, the thing is, we can't go back to 2009, but I'm telling you, we're entering a time where we're going to look back and you're going to be like, man, I should have put more money. But you don't have to. We're in that moment right now. Man, you got to learn to take advantage of when opportunity comes. And, like I said, history is our best teacher. And ultimately implement a strategy and stick to it. Because again, that road trip example, if you get sidetracked on a road trip, you don't stop and plant and you live there and just kind of get upset, right? You're not going to, your car gets stranded along the road. You're just not going to stay there, right? You're going to have figure out a way to get back in the car and go where you need to go. And that's the same thing here. If you stick to your strategy, remember, build that house on a rock, not on the sand, and you'll be fine. So whenever because it won't be the last time that something like this comes again, but when it does, you'll be more than prepared for it, right? And 6, evaluate your situation with a professional. One of the things that I coach my people is to let's look at your situation, because your situation is going to be completely different than somebody else's situation. So if we understand that and take that in consideration, we're not reacting to what somebody else is doing, and you have somebody to go to. Because trust me, the people I've received calls from, all my clients, if I wasn't there to talk them off the ledge, they would have pulled out their money. And if we go back to buying barrels of gasoline, they would have sold it at its lowest. Which, you tell me, does that make sense? No, it doesn't. But had they not had a professional to walk them through that, they would have made decisions that weren't in their best interest. Because I'm looking for their best interest. Because I'm staying level-headed. I'm making sure that they told me what their goals were. So that's what I need to focus on. Whatever's happening around them is not important, because their goals are what matters. And the same thing is that, it would be beneficial for you. So yeah, one last thing, went over these. Okay. All right. Sorry. All right. So I had some questions from Facebook, and where can I go to invest money to go without going through a broker? So there's plenty of online platforms, Fidelity, so forth. But the only problem with those is that if you've never invested, you don't have anybody that's kind of walking you through it, you could make decisions that aren't necessarily in your best interest, or you don't even know where to go to. It's always good to have a professional. Think of a financial professional as like a lawyer. Like, you might be able to read some things about the law, but they're going to understand how the law works because they deal with it firsthand. The same thing with working with a professional. See, the benefit of working with a professional is that they might make you money when you are ready to lose money, and they prevent you from losing money. You get what I'm saying, right? So understand that, hey, it's better to work with somebody. If you really want an honest and fair opinion, I'd be more than happy to look through what it is, your investment goals and so forth, and help you reach that. Because I'm going to be able to guide you and know what investments are available for you, what makes sense, how much are you looking to do. You see, there's a lot of factors that go in place, because you could go and do it on your own. And if you feel fully comfortable in doing that, man, by all means, do it. But I tell you what, think of it like from a coaching standpoint. Those people who are coached tend to have better results than people that do it by themselves. Doesn't mean that people that could do it by themselves aren't capable of handling it. It's just there's somebody there to hold you accountable. And I have another question. What if I'm older in their 60s and I'm still working? What do I do with my 401k, right? So that's a great question. It's something to be concerned about, especially with the climate that's happening around us. Um, if you're still working, the good thing is that they could have options. One of the things I would recommend is definitely sitting down with somebody and help them move their current money. Maybe they could roll it over into another account where they don't pay penalties and taxes, but because everything's low, it's not like they're losing money. See, they're staying in the same market. If they move money and they start preparing for it, now when the market goes back up, that financial professional could kind of set them up so in case something like this happens in the future, no, they won't be in a place where they're acting desperately and worried about their money. See, if you're set up correctly, nothing like this would really affect you. You would have your money allocated in different, like you have a diversified portfolio, which is kind of one of the things I help people do. And what's the best advice? And I kind of mentioned it already. Just stay level-headed. Make sure you're just sticking to your plan and stick to a plan. Seek advice when you need it, but seek advice from people that are professionals. Other people, you're going to listen to other people and they might tell you different things like, oh man, the world's going to end. You need to take out all your money and which you can, but obviously we know that that's, if you, for most people, not everybody's dying at alarming rates, right? Like, so that's something you have to keep in mind. So what's happening to my already invested money? Just kind of like I mentioned. So just kind of like the barrel story, when that market went down, you didn't lose the amount of barrels. In this case, it's called shares. The other way to explain it, think of if you have $100,000 house. If the house dropped to $70,000, did you lose your house? No, you just lost the value of the house. So the house was worth 100,000, now it's worth 70,000. That means it dropped 30%. But really, would it make sense to sell your house at that moment? You sell 70,000, or you knew it was 100,000. If you're like, hey, if I wait on it, it'll go back up. You'd probably wait till it goes back up, right? So it's the same thing. See, housing and stocks are very similar. The only difference is that we actually see a house with our eyes, whereas the stock comes on a paper form, a document, and so forth. So that's all I had. I really appreciate you guys, and thank you again for your time. And I hope this helps. All right.